Okay, we're going to move it on to Dave Thomas, who is a senior partner at the consulting firm Rocketbuilders. So Dave, maybe you could tell us a little bit about yourself and then go on to the investment trends in this sector.
Great, thank you very much, Thelsel. So I've been a partner at Rocketbuilders for 18 years. I'm also relatively passive, but sometimes active angel investor. And my own background is I've done a number of different startups myself, total of 5. So some mixed success, like many others. In terms of Rocketbuilders, and I actually will share, I made a couple of slides for everybody to look at, and I'll share them right now. Rocketbuilders is a consulting company. And one of the things we do is we do the Ready to Rocket lists. And the Ready to Rocket list announcement will be Tuesday, not next week, but the week after, from 1:30 to 2:30 p.m. I am responsible for the Cleantech and AgTech lists, and I have to really thank Foresight and some of the mentors at Foresight for helping us take a look at a really good group of companies this year. There will be some interesting turnover in the list, and I'll sort of segue into that a little bit later on, but a fair bit of the data will come out on the 14th. So what I'd like to do is just go in and take a really quick look. This slide, if you look on the right-hand side at the bottom, it shows you the Cleantech and Agritech investment numbers through the Canadian Venture Capital Association for 2019. The reason this is interesting is that if you look at 2019, you see a couple of things. One is that the total dollars invested in Cleantech is pretty good. And when you combine Agritech and Cleantech, it's quite good. And the number of deals or large deals in Cleantech has gone up significantly. And what it means is that really you're getting larger amounts of money going into companies. So in Cleantech, through the venture capital stuff, it says, you know, the Cleantech deals, a number goes down in Q4, but the dollar value goes up. So it means larger raises as companies build commercial scale plants. And I really think this is positive in terms of the long term for Cleantech. It's really an opportunity where stuff has gone full cycle. You're seeing risk from a number of years ago being rewarded. So as larger amounts of money go in, means that the angels who started working with the companies at the very beginning of the call it the life cycle of that firm are being rewarded, and they're seeing their investment go forward. And you're also seeing with commercial scale sort of build outs and stuff like that, that the new technology is really being utilized effectively. So in all, I think that this will make the sector more robust. And I think it's an important thing to look at that way. Going to give you a little bit of angel data from Hockey Stick. This is directly out of the report, and I have to say that it's really relatively informative. One of the things that Thelsel and Frank did when they asked me to speak here is I'm really pinch hitting for somebody from BDC. And if there's a super busy group of people in Canada right now, it's the people from Business Development Bank. They're really busy with all sorts of different stuff. So when I look at this, the angel investment says that 50% were new investments, 50% were follow-on, so very active market. 75% were under 250K. And one of the things that's really interesting is that Cleantech is the 5th highest sector. And that's actually really important. It's not shown on this graph, but the dollars that go into the Cleantech piece through angel investment have steadily climbed over the years. And it's now ranks number 5 after digital health. What else was in there? SaaS software and life sciences were one of the other 2 in the top 3. But again, this is a good sign for the Cleantech market. I think it indicates that there are more and more early stage companies coming through. And when you couple that with the venture capital data, it's telling you that there's really more and more of a flow. So if a technology starts and then is successful and it can be adopted into, we'll call it almost everyday life, there's a real pathway for stuff to move that way. One of the things I do want to talk a little bit about is everybody says, what's the outlook? Well, it's a reality that the outlook is impacted by COVID-19. It's just something that happens. So this is CV Insights data, and it talks a little bit about how things move every sort of over the years. And if you're looking at Q1 2020, they're all saying very clearly, although Q1 is usually a little bit lower, that there is an expectation that the market is going to slow, and the market is going to take some time to understand the uncertainty. And I think that that's one of the key components in the things that we're looking at and the things that we're trying to understand right now. There was a really interesting announcement earlier on today when we were doing the preparation. Jeanette referred to it as well. And there was an announcement from BDC that BDC Capital will help finance startups by matching funds from qualified venture capitals. And it will be a convertible note. So this program, the details are not out yet, will launch later this week. And I think this is something that I'd really like to see the panel discuss and try to understand what it means and how it will come into the market. It'll be available to BDC-backed companies as well as those outside its existing portfolio. So they're reaching out to other venture capital firms that are active in Canada. And I really believe it's imperative that angel networks make it a representation to have angel-backed companies included in the matching program. If without that, you end up with a separation of those which are VC-backed, which are, sometimes a fair bit larger or more active than an angel-backed company. And without the matching at the angel level, I think it really will stall out early stage startup financing. And I think it'll make a significant difference there. In one way of looking at it is it's a convertible note from BDC. So if a company raises $100,000 in a follow-on round of some type with an EBC credit in British Columbia, it means that the cost to an investor is $35,000, and depending on the marginal tax bracket, it's $25,000 for a company to have $100 grand. I think this is really, when you think of it, a very, very positive way to leverage money into early stage companies. Just a little bit about history, and I think this is important, is when the dot-com bubble burst, and I was around when that happened, investors didn't trust their decision making. That was one of the comments. And then in 2008 and 2009, large corporations initially adopted cost-cutting measures and then later evolved into expanding rapidly when the economy was no longer falling. So there's a really neat quote from PitchBook, and they talk also about the Great Recession in some respects and say that deal volume was down, but the angel volume was actually increased. So at the seed level, things like that happen. And my comment earlier on about creating leverage in order to make sure that this does occur, I think will mean that there could be an uptick and a real interest in angel deals. One thing that also I think is important is that in the United States, there's $349 billion in small business loans. There is no support for energy companies, and that's oil companies, that's new clean tech companies. So far, very little has been announced. So what you're seeing is that even though there's a record stimulus by dropping the interest rate in the United States, there's a whole bunch of companies that are trying to figure out what to do. Do I lay people off? Do I downsize? Do I keep going? And they're trying to make those decisions in days when stuff like this is going to take weeks to move. And it makes it really, really difficult for companies to make decisions. And when there is uncertainty, it really slows down a lot of the process of investing at almost any level. So what do I expect is going to happen is right now a lot of small companies are consumed with corporate finance and HR issues. There'll be slower business decisions all across the board. There'll be fundraising delays. There will be talent scarcity. I spent some time at Venture Labs, and right now we're working with 3 companies that are going to try to scale very rapidly because they have solutions that fit into COVID. It's actually difficult for them to figure out how they're going to get the really good quality people that they need. So there'll be other effects that are inevitable, and a lot of them are hard to predict. So the question I have for everybody who's an angel investor is, how long do you think it'll be before confidence is restored in the economy? And you would assume that restoration of confidence in the economy may come a little bit earlier than, COVID totally going away. The question is, when will people obtain confidence again? Is it less than 6 months? Is it greater than 6 months, or even greater than 12 months? I mean, my hope is that it's kind of in the 6-month category, when people start to see the light at the end of the tunnel and understand what the new dynamics will be like. And that's kind of sort of my belief in what things are doing at this time. So Thalsel and everybody else, that's all I wanted to say in terms of making a presentation. I see Jeanette has come back. So I alluded to Foresight at the beginning. We were talking a bit about the Reddit rocket list. And once again, I have to say kudos to Foresight for doing all the good work that they do in many different areas. Are there any questions from people or from anything else? And as I said, I'm pitch hitting for BDC. Don't expect me to have tons of answers.
Any questions from the audience? Please use your Q&A button. Dave, I don't have a question, but Joe has a comment. He believes it's likely 6 to 12 months, especially with respect to the US elections. Care to comment back?
I would. I actually think that the US election is a very important milestone in all the stuff in North America. Right now you have a significant amount of uncertainty, and I don't see any of that going, I don't see much of it mitigating until after the election. And realistically, if there's some change or there is no change, it will really indicate a little bit of what the path is forward. So I think that's something which will allow people to reset their expectations.
Thank you very much, Dave. Thunderous applause. You'll just have to imagine it.
Okay.
All right.
Thank you for having me. Yeah.
Thank you. That was great. And we'll be seeing more of this type of information at the Rocketbuilders Ready to Rocket launch that's happening on 14th of April. Okay, I'm now going to turn things back to Jeanette, the CEO of Foresight, and she's going to introduce herself and her panel. Jeanette,
Awesome.
Over to you.
Thank you, and thank you, Dave. The Ready to Rocket list has been, I think, a staple in Vancouver and BC's tech community. So thank you for the great work that you're doing as well. Now we are going to move on to a panel. It's, the main theme here is that we hope to enlighten all the different investors on the line, but also maybe talk briefly about sort of the impact that COVID-19 will have on the investment environment and climate. So on the line, we have a few speakers. We have Keith Ippel, so a friendly, familiar face here. Keith is CEO of Spring, 20 years of experience as a leader in technology and impact businesses, been doing great work with Spring to help educate investors, to help better position startups to raise funding, and he's going to sort of share some insight into impact economies, ecosystem development, et cetera, et cetera. We also have here Shirley Speakman from Cycle Capital, so someone from the East Coast or Easter Coast. Shirley is a senior partner of Cycle Capital, Canada's most active clean tech venture capital fund. Based in Toronto, she also sits on portfolio companies across North America. These companies are in the plastics and polymer cycle, upcycling, transformation, IoT and energy storage, among many other things. So we'll let Shirley jump in a few moments there. And last but not least, we have Noel Poirier, who I had the privilege of being introduced to by Element 8 in Seattle, Cascadia region. And Noel is currently Executive Managing Director of the Clean Energy Venture Group, coordinating the group's operations and growth. Prior to this, he was founder and CEO of VANTEC Performance Chemicals USA, a specialty chemicals company focused on green chemistry, now integrated into the Daon Group, a global manufacturer of specialty chemicals. And so to kick things off, I'd love to pass it over in that order to Keith. We'll start with Keith. A quick update. How are things going? What have you been working on? And then we'll go from there. Hello. Okay, Keith might be having. Do I have Shirley and Noel on the line? Can you?
You do have Shirley on the line. Would you like me to put my video on?
That would be great. Shirley, why don't you jump in?
Sure.
Very
So
excited
hello.
to have you. Thank you.
So hello from Ontario. That's actually where I'm based. I'm actually working out of my dining room, as probably most of you are. Cycle is actually based in Montreal. We have just under $500 million of assets in place. And we're currently investing out of our fourth fund. We do have a fund based in China as well. So the total funds on the platform are 5. The fourth fund currently sits at 136 million. And we're what we describe as a Series B investor, which it typically means something different to every person. But for us, it means that the technology is proven. And there's a clear line of sight to commercialization, and we kind of measure that sometimes as $1 million in revenue, but it's really just a heuristic, a rule of thumb. What you might find interesting is that we actually have invested in a Vancouver-based company called MindSense Technologies, and have been very pleased with that. So we do invest across North America. We're not geographically restricted, but we do focus on that Series B growth stage. In terms of how life has been impacted for us, I'll kind of echo some of the stuff that people have heard from Breakthrough earlier. Because we have a new fund, we are still looking for deals. And I think that's a really important message to hear. We believe that we can pursue really strong opportunities that perhaps might have been way too expensive for us at the turn of the year. We will be looking to make investments with people in a syndicate. It's one of the lessons that we've learned over our time with the 5 funds now. It's far better to have people around the table with you. It helps to make sure that the company has the runway that it needs to get to where it needs to be, which for us has always been at least 18, but preferably 24 months of cash. And it also helps to keep you honest. Many minds end up making great decisions. So beyond currently looking for more deals, we too are trying to help all of our portfolio companies manage through this COVID crisis. We've actually set up a war room, or a SWAT team, I guess you'd call it. So we're having meetings twice a week with our portfolio company CEOs all at once. And what I find really interesting and encouraging about that is we'll start the conversation, but the CEOs are interacting and sharing information in an incredibly efficient way. So I think that's incredibly valuable for our CEOs, which is great, but it also means that some of that time that we had to do due diligence and to dig deeper into companies is actually, there's a drain on our time. So I think in summary, maybe that's where I'll leave it. But I guess the message that I would give everyone is that we continue to look for good deals.
Awesome. Thank you, Shirley. I'm going to now pass it back to Keith. Keith, are you on the line?
I sure hope so. Can you hear me okay?
Great. Yes.
Awesome.
Over to you.
I'm not 100% sure how to turn my video on, but I'd love to if I could. Yeah, I don't see where I can do that.
Oh, did we just lose Keith again? Oh, there you are.
I'm here.
Oh, yay, great.
I just promoted Keith to panelist. I think that might have done the trick.
Yeah, thanks, Frank.
Thanks, Keith.
Frank, you're not just an amazing angel investor and a good-looking guy, but you know your IT, so I'm so thankful. So. Yeah, so everybody, if you don't know me, my name is Keith Ippel, and I'm the co-founder and CEO of Spring, and we exist to change the world through entrepreneurship. We work primarily early stage with entrepreneurs and investors. We run an incubator, we run accelerator, and we do ecosystem development work in communities that are trying to build resilient innovation economies. We do that currently in about 37 communities around the world. We're headquartered in Vancouver. We do work across the province, a few other parts of Canada, Asia, Latin America, Central America, and Europe would be the places where we do work. We focus on impact. So really for us, it's about working with companies that are trying to make the world a better place every day. And that means that within our portfolio, we definitely see our fair share of clean tech. And that's why we have been proud to call ourselves a partner of Foresight for the last little while and continue to do so. As a part of this conversation, I think there's probably a couple things that we think about when we look at both what's happening in the crisis and this sort of emerging recession that is happening. The first thing that I will highlight to everybody amongst trends and activity is that right now impact investors actually seem to be leaning in more than standing on the sidelines. Definitely seeing a lot of activity from impact investors. This spans clean tech, health tech, progressive food and ag tech, amongst others. I think that the conversation right now is not about whether or not to invest, but it's more about how to find scale through collaboration between investors when there's opportunities and solutions that really can create big impact. As a part of that process, I would say that they are being quite global in focus as well. So we're seeing a lot of people looking at cross-border deals, which I think is quite exciting. The other thing that I would say is that there really are some very interesting global opportunities for both entrepreneurs and investors. And so one example that I would give everybody on this call is an initiative that is happening in the Asia Pacific region. It's called the Incubation Network, or TIN for short, and it is designed to help bring clean tech and circular economy solutions into the 6 most plastic polluting countries in the world, all based in the Asia Pacific region. It's $100 million US that's going to be spent over 5 years, and part of that money has been earmarked to bring global companies and their solutions to then apply their solutions into those markets. And those markets being, in no particular order, India, Thailand, Indonesia, Myanmar, Vietnam, and the Philippines. And so it's a really great opportunity for any of the companies that are on this call. As well, they're trying to really foster cross-border investment with solutions that can bring real impact into those 6 countries. And obviously with the size and scale of the population of those respective countries, it gets to be quite interesting from a venture scale perspective. And then the last trend that I would highlight is around local investor activity in Vancouver and in BC. And so some of you know that last year Spring ran the Impact Investor Challenge, which was an opportunity to train 20 people to make their first early stage impact investment. Open Ocean Robotics, who a lot of people on this call would know out of Victoria, was the winning company. They secured just over $100,000 in investment through that. And in kicking it off again this year, Spring is actually doing it as a split online until the end of August, and then moving, hopefully, fingers crossed, into in person at the end of September. But the reason I mention it is because we actually have had significant demand from people who are saying, now is the time. And I think this is a message that I want to convey to everybody here, and then definitely open to conversations. But the premise is that if we're moving into recession, and if we're in this crisis where people are changing patterns of behavior, if we believe in things like clean tech, health tech, progressive food and ag tech, circular economy, opportunities that make the world a better place, now is the time to reshape what business will be coming out of this crisis. And so investors are actually saying, hey, help me to fuel that. And so those are probably the 3 big trends. One is impact investors leaning in, trying to find scale. The second one is the global movement, which includes TIN. And then the last one is how we're seeing local investor activity.
Awesome. Thank you, Keith.
Cool.
Now
Thanks.
I'm going to pass it over to Jean-Noel. Jean-Noel, are you on the line?
Hi. Yes,
Fingers
I'm here.
crossed.
Can you hear and see me now? Okay.
Yes, we can. Great.
Okay. Nice to meet you all. So, by the way, we may have some children participating in this panel, and there's not much I'll be able to do about it. So apology in advance. I mean, relocation between New York and Seattle, so it's complicated. So yeah, Clean Energy Venture Group is also an investor in clean tech with a focus on climate change and carbon. A bit like BEV, we have actually a target at 2.5 gigatons carbon reduction at scale by 2050. So we tend to favor, climate change technologies. We also invest, in a broad range of things, from transportation to buildings to etc. And the whole spectrum of clean tech. We have, just to clarify, and it's maybe important for some companies here, we have two groups, two organizations. We have an angel group that's been extremely active on the East Coast in particular for 15 years. We've got about 40 portfolio companies. And we also have a fund, 110 million, that was raised a year and a half ago. And so we are still very active in pursuing investments. Indeed, we had a 6-hour meeting today. We review 20 companies per week on average. It went down in the last 2 weeks, but we still have companies applying with 2 pitches today. So we're definitely active and interested in companies. In terms of the crisis, I think we need to look at it with 2 time horizons. There is short term, there is long term, and if possible, try to find some positives. Short term, same as what was said before by Shirley or Matt. Excuse me. We're clearly focusing on the portfolio, defending the portfolio before investing in new companies, and I think that's going to be a trend, everywhere. So defending the portfolio means making sure we understand risk, making sure we protect the runway, we manage cash, etc. So we tend to do that while keeping an open funnel for new companies. But clearly funds will tend to do that first, and that makes sense. I would say the other thing we're doing is sharing a lot of information, especially in the US. There is this big federal, grant program or loan programs, actually, to help small companies. It's a lot of money. It's $2 trillion, but it's very complicated. It's not very clear. And so, we actually had a call on Monday, putting all the companies' CEOs together and sharing information live. About what this program is about, how you apply, who qualifies and not, etc. It's very helpful. We put together even a shared Dropbox to share information on specific questions that people had. So we're really trying to defend the portfolio first. I think the other bad consequence of that crisis on startups is going to be the funding available. Simply put, a lot of people have lost money or are anxious, want to preserve their capital, and are going to be a bit more hesitant to invest, at least in the short term. So in the short term, it's going to be harder, but it doesn't mean it's going away. A lot of people are very committed, and that's not going to change. The other consequence, I think, really short term, is going to be on valuations. It was said before, I do agree with that. There is a time where companies come up with high valuations because the market dictates or allows them to do so. It's going to be much more difficult today with public equities going down and the risk level going up and certainty going up for investors. So I think companies will have to be a bit more reasonable on valuations, and it might have some consequences on down rounds and other things for companies that just raised capital. So a lot of difficult things. In the same time, I'm looking at it long term. If I want to see one positive, I heard the Secretary General of the UN talk the other day, and he was saying, this is a horrible crisis, but climate change, if we let it run, completely unchecked, will have consequences of that nature that will alter life fundamentally for people in ways they cannot even imagine. So. Not to look for a silver lining, but this might be a wake-up call for many, and make them realize that if we don't act seriously on things, life will change way beyond their wildest nightmares. So it might help sort of catalyze the conversation and capital in the space in the long term, but obviously we'll see. The other thing to look for positive long term in this, some innovation is going to come out of that. Remote work is already the norm, right? We are doing this nice working. Some people are going to figure out models that work. And actually, we had a pitch today from a company that does remote building management monitoring. So, they have systems that allow you to not only diagnose, but also act on building maintenance remotely. And they think that this is going to help their business. It might be an exception more than the rule, but there's going to be some positives out of it. So So that
No, that's very helpful. That's very helpful. A lot of information. So that's great. It's interesting, you know, I think one of the things that everyone's trying to figure out is how short is the short term. And, you know, having never faced something that really started off as a health crisis and now has moved into an economic crisis. And of course, we're seeing lots of different packages come to the table. But for many pre-revenue companies in the earlier stages, they're not able to leverage some of those solutions. I thought it'd be great to pass it back to Shirley as well. You know, Keith, you know, really, I think positively bullish, and I don't disagree with him that from an impact perspective, I mean, Cleantech's overcome many years of challenges, whether it's the Great Recession or even years before the cycle before that. But as Jean-Noel's rightly pointed out, on, you know, from a more for some of the later stage capital and the bigger buckets of money, sometimes that comes from high net worth folks and companies that have lost quite a bit of value in the last 30 to 60 days. And Shirley, maybe I'll pass it over to you, you know, to give some of your perspective and context. Of course, you know, the goal is to, you know, keep everyone positive, but at the same time, we want to be realistic about the best way to tackle this. And
Yeah, so as I said, there's a cycle that's looking for new deals because we have a new fund that we're looking for. You know, we want the capital deployed, and we think that this is a great opportunity for us. With our existing portfolio companies, we actually are triaging. We're saying, okay, here's MindSense that's just raised $20 million, so it's okay. And we're looking for them. We take a look at it and say, okay, well, what happens if this? What's the impact on mining companies? So MindSense sells a technology into the mining space. Many of you know it. And so, you know, mining companies are shutting down. How long is that going to take for those companies to bring those shuttered mines back up? And we're working through those type of strategies and scenario analysis for that type of an existing company. So it's got good cash runway. How do we make sure that we're managing through various scenarios? On the other hand, we have companies that have 9 months of runway, and they have to work through some hard decisions. For those companies, we'll do that with them. We'll take a look at what our reserve is and how to prioritize against those, and put money to work at an appropriate valuation and trying to make sure that we extend that runway. So I think for the VC community, it's forcing us all to think a little bit more. It's forcing us to think more about the fundamentals of the business and how do we actually create that value, as opposed to, as I said earlier, we saw some valuations at the end of last year that we're sitting there just scratching our heads and thinking, how does the venture capital math actually work when you're doing it at a Series B? So I hope that's helpful.
No, that's great. That's great. Okay, I'm going to open up. There's a question here, and I'm going to try to paraphrase because some of the context was provided before the question. But essentially, Lucinda Jones, I hope I get this correct. It seems that perhaps the assumption is that, given this climate, from a health and economic perspective, perhaps there's also a shift in paradigm thinking around sustainability in general. So people are starting to understand more that clean tech and sustainability are the future. Now that manufacturing has been shut down, people are seeing all over the news, wow, look at, we're not, there's less population in Asia, we're not driving to and from work. So that transportation, those emissions from transportation have been reduced. So her question is how does that affect how products can be differentiated in the market and support the thesis for investing in sustainable ventures or climate ventures? Anyone?
So, hey, this is Keith. So I think I get the question. So the question is kind of like, with these changing patterns of behavior, less driving, obviously a lot less air travel, and sort of this reveal of opportunities for new solutions, does it increase the appetite? I'm going to give my perspective, which is that at the end of the day, investors are always looking for amazing teams who bring a real solution to solve a real problem that has a significant enough market opportunity to match the intended return profile of the investor, right? And so I do think that that's actually point number one. I don't think people are going to invest just because it makes them feel good. That's then, giving to a charity or a nonprofit in a different form. So I think it's really critical. You still have to come at the solution with the same core attributes that any good startup brings. I think what you're doing, though, is you're adding a slide that says, why now? So why invest in your solution now? Why now is there momentum? And you're going to want to try and bring proof points to the table. And then just always remember that progress and traction will always trump everything else.
Just to add to Keith's comments, I think one of the things that we'll be looking for is show me how you're resilient. So as a company comes to us, what happens if this COVID type event happens again to you? How would you respond to that? So I think that'll become part of everyone's way of thinking. But that's in augmentation to the 2 points that Keith has indicated.
Jean-Noel, did you have anything to add there?
I'm sorry, I couldn't hear you. I think you're muted. No, I agree. I think fundamentals will still need to be there. That's it, regardless of the environment. The fundamentals are always the same: size of the market, validity of the solution, the economic value of it, the team, etc. The potential returns, the climate impact, if that's a criteria for investors, etc. So those won't change. The question is, what does change with the change in the environment, and how can you adjust to it, resist, or benefit from it? And I think maybe overall people might be a little bit more precise on their risk mitigation, modeling and scenarios. You will probably want to see in business plans some worst case scenarios, actually, and pay a bit more attention to them, knowing that it just happened again. So that might be more of a sort of a process going forward.
No, that's great. That's great. We have come up to time. Two things that I just wanted to make a quick comment on, following along a bunch of different investment groups along, on Twitter and social media. It's been quite exciting, not only from all the panelists here, but there to see that some folks are saying that now is actually a good time to invest in companies. The valuations might be a bit better, but also if a company can survive this, that does their resiliency factor goes up quite a bit. And then on that resiliency piece, that's definitely something, Foresight, and I'm sure Keith and all of the accelerators, we have to really take a step back and make sure that resiliency is very well factored into early stage thinking for CEOs and CTOs and the startup teams. So that's sort of all I wanted to comment on, and I wanted to really thank Shirley and Keith and Jean-Noel for your time. I think it's been really great for us to have such a dynamic panel, and of course speaker before with Matt from Breakthrough Energy. So thank you everyone, and I'll pass it back over to the rest of the VANTEC team now. Thank you.